In today's masterclass, we are going to take a look at chart patterns, and this is going to be the first of two videos on chart patterns, and in this one we're going to take a concentrated look on reversal patterns. So chart patterns, first of all, what are they? A chart pattern is a distinct formation on a chart that signals potential for a future price movements. From the pattern, we should be able to predict or have a good idea of what could potentially happen to future prices. Technical analysts use these price patterns to identify current trends, trend reversals, and for buy and sell signals. There are two types of patterns, reversal and continuation patterns, and in this video we'll be looking at reversal patterns. A reversal pattern signals that a prior trend will reverse upon completion of the pattern. The reversal patterns we're going to take a look at in this video are double and triple tops and bottoms, and then head and shoulders tops, and then inverse head and shoulders bottoms. So first of all, let's take a look at double or triple tops and bottoms. These patterns are formed after a sustained trend and signal that the trend is about to reverse. These patterns are created when price tests resistance or support levels 2 or maybe 3 times, but cannot break through either the support or the resistance. A bottom is completed when price moves above the interim peak for a double or triple bottom. A top is completed when price moves below the interim low for a double or triple top. So we will take a look at those shortly when we come to take a look at a chart. A price target is calculated by measuring between the peaks and the troughs and the interim level, and then project it down from the breakout point. And again, we will take a look at that shortly. So here we go now. So in here on the graphic on the right and the infographic, we see the double bottom. The market is in a downtrend, and then we get the market go and test the same level twice. So this is a double bottom. So twice the market testing this support level here. And then when the market moves up to and back above the interim high. So here are the two lows, the two bottoms, and then the high between these two lows. When the market breaks above that high, at this point here through this red line, then the market has completed the double bottom, and then the projected distance, the target, is going to be this distance here between the lows from the double bottom and the peak, the interim peak, projected from the breakout point here. So that is going to be the target. So in here, what we see in here, we actually see a double bottom, really a triple bottom here. So we had 3 lows go in down at these levels here. First of all, it's a double bottom when we break these lows here to push us to target up to this level here. But then we have a triple bottom form. The market retests here 1, 2, 3 times. And then when the market breaks above this peak here, then the market on the ANZ Bank daily chart has created a triple bottom. And then we see a price objective, which will be the distance between here and here, projected up from this point here for the new uptrend. A double top is similar in here. So here we have the daily Aussie dollar chart. We have the peaks here, and then the double top triggered down through this low here. So on the infographic here on the right, we have 2 highs at the same level and then an interim low. When the market breaks down through the interim low after having set the 2 peaks at similar price points, that then triggers the double top pattern through here. And then the objective, the price objective, is this distance here, represented by this red arrow, projected down from the breakout point. We're going to now take a look at head and shoulders top patterns and inverse head and shoulders bottom patterns. So a head and shoulders top is a bearish reversal pattern. The head and shoulders top contains 3 successive peaks or highs. The middle peak, which is the head, is the highest of the 2 others, of the 3 in total, is higher than the 2 outside peaks, which are higher. The head is higher than the 2 outside peaks, the shoulders, which are lower, and they are lower and roughly equal to each other. The reaction or swing lows of each peak are connected to form a neckline, and we'll see this shortly when we come and look at the chart and the infographic. The neckline can slope up, down, or be horizontal. So here we have the graphic showing 3 successive peaks. The highest peak is in the middle, which is seen as the head. This is the left shoulder, the right shoulder, at approximately the same level. And then we join the lows in here between the 2 lows of the high, which is the head. We join these up to give what we call the neckline, And when the market breaks the next line from the right shoulder, this is then the breakout point. The head and shoulders pattern is complete from the previous uptrend. It signals a reversal. And then the target, the objective, will be this red line here projected down from the breakout from the neckline. So this would be the target area. For an inverse head and shoulders, the opposite rules apply for the head and shoulders pattern, for the inverse head and shoulders. So here we have a downtrend. We have 3 successive lows, with the lowest low here being the head in the middle of the 3. The left shoulder and the right shoulder are approximately the same level. The points joining these 2 peaks between either side of the head, the low from the head, is the neckline. And when the market breaks the neckline here, then we see a target. This red distance here is the target, this distance of the head from the peak of the head to the neckline projected up higher. So when the market was in a downtrend, we get the head and shoulders, inverse head and shoulders bottom, and then we see the market move then into more of an upward trend. So in this video, we've taken a look at reversal patterns, the double and triple tops and bottoms, and then the head and shoulders and inverse head and shoulders pattern. This has been Steve Miley for The Bull, and please do join us again on thebull.com.au and thebull.asia. Stay bullish.